the week ahead. We're going to start a little differently today. I want to start by looking at the profiles. So many times, traders focus on what did happen versus a combination of what did happen as well as what didn't happen. The first thing that did happen on Friday was the market went up and took out the overnight high. So at that point in time, that left us with a high that has now been established during regular trading hours. What didn't happen was the market had the opportunity to complete an outside day to the downside, and it didn't do that. So that alerts us that the chances are we were seeing liquidation on Friday rather than a combination of liquidation and new money selling. To increase the odds of downside continuation, it would have been important to see the outside day demonstrating that we had new money selling. Now, the next thing that didn't happen, while we got recovery when we failed to complete the outside day, and an outside day is only completed, the way I look at it, if the market closes meaningfully below the previous day's low. Now, what didn't happen, while the market rallied following that, notice that the rally did not even get back to half back. The half back line is kind of hard to see, but it's just a little bit above the afternoon recovery high. As we come into next week, the most important thing that we're going to be looking at is, can the market find acceptance down below Friday's low, which would be acceptance down below the 2-day low. If there is to be any downside continuation, that would be the first thing that we would look for. Next week's an important week, particularly on Thursday when we have CPI. The market rallied initially on the week jobs report on Friday because short-term traders immediately focused on the fact that this greatly increased the odds that the Federal Reserve would reduce interest rates. If you do a little historical research and you look what happens a couple of months following reduction in interest rates, if reduction in interest rates take place because the Federal Reserve is trying to cool the economy, very often the market continues higher. If you look historically, when rates have been reduced because the market was weakening substantially, down the road, a couple of months, the market usually is not as strong. There's usually some weakness in the market. Now, I'm not a market historian. I'm just drawing that to your attention. The last thing before we go to the bar charts is we had substantial excess on Friday. That's the most excess that we have seen in this market for some period of time. So my immediate focus on, as we come into next week, we'll see if we can get price acceptance down below Friday's low. Okay, let's take a look at the monthly bar. So the monthly bar has been one time framing higher for several months. Any longer term significant change in the market will see a cessation of one time framing on a larger basis, which would be seen through the monthly bar. Now, remember, I've said a couple of times that a few years ago, I saw the daily turn down, I saw the weekly turn down, but the monthly never confirmed it. In other words, the monthly never showed deterioration, and the market went on to make 22 new highs. The ultimate change in here, if we have to see some significant selling, I think we would see a cessation to one time framing on the monthly bar. Okay, let's go now to the daily bar, please. We look at the daily bar. So you can see that, like I said, and we saw it on the profiles, we had substantial excess. So the first thing we're looking for in the daily bar is, can we get down below the 2-day low? Notice that the big break last week rallied from the 50-day moving average. So we would have a couple things to look at. We would be looking at, can we find acceptance below the 2-day low, and particularly Friday's low, and then can the market show any significance and get down below the 50-day moving average next week? Okay, and let's end this now by looking at the weekly bar. Okay, the weekly bar gives us a little different perspective. We have a 4-week balance. So if we come into next week, the first thing we would be looking for, can we get below the 2-day low? The next thing we would be looking for, can we get below the 4-week low? And then, as we pointed out earlier, the real significant change would be that we would trade and stop one time framing higher on the monthly bar. It's going to be an interesting week, and we're going to see if we get anything different from what we have been seeing. The first indication is that we did have substantial excess on Friday, and we didn't get the same kind of recovery we had been seeing. Have a great week, and goodbye.